So welcome to our webinar. What does it actually take to scale financial services across Europe? If you're here, it's because you are planning on scaling your financial service internationally. And the goal of our webinar is to give you concrete examples and guidelines on how to do that, especially for digital onboarding. So my name is Charlotte Stril. I'm head of marketing at QuickSign. And today we have two expert speakers, Charlotte Stril and Antonela Dunca. Thank you both for being here. I chose you two as our guests today because I wanted to deep dive on your common experience working together. You met while Antonella was working for Opel Financial Services, now Stellantis, and Charlotte, you were with QuickSign, of course. Together, you scaled 4 different countries across Europe, France, Germany, UK, and Italy. We want to know how you did it. And what did you need to overcome? And if I may add a little bit of context, recently you did a podcast together, a podcast called Breakfast With, which is a QuickSign podcast. And the second episode, obviously, you were together, Antonella and Charlotte, and it was dedicated to the mobility sector. So we'll talk about that later, but just so you know that Antonella is really a super guest in June. So we're really happy to have you here, Antonella. First, let's find out about your backgrounds. Charlotte, if you can start, please.
Hi, so thank you so much for having me. On my side, I have a dual background in both marketing and business development. So on the marketing side, I started my career at L'Oreal. And on the business side, it's with QuickSign, actually. I opened with the founders 15 countries across Europe for the company. So we work exclusively with financial services on digital onboarding. And so sometimes it's just individual countries, and then other times it's really scaling across Europe. And that's notably what we did with Antonella. And the idea is to give some guidelines here, some ideas and inspiration for those who have joined us today. So thank you. Antonella, the floor is yours.
Thank you for having me, guys. It's such a pleasure and an honor. I'm glad to see that I have some of my formal colleagues around here. So glad to see you guys interested in the topic. As I'm Antonella, I've been working in the automotive sector from a banking perspective and area for almost 20 years now. I've been working in Arval, leasing, and then in General Motors that have been transformed to slowly Opel Financial Service, PSA Finance, and Stellantis, and so on and so forth. And since 2021, I've joined VinFast Europe. During my last almost 10 years experience, and even a period prior to that, I've been challenged to this international scope on like extending the activity or organizing activity or implementing different scopes, different topics, different projects in different markets. And this dimension of the international scaling has been part of my professional life for more than a decade now. So I'm glad to be able to share a bit of my knowledge with you guys and experience, and hopefully to be useful for you in your future or current projects.
So welcome to you both. So what's going to happen now? So it's going to be a 45-minute presentation. So we want it to be live and interactive. So really don't hesitate to ask your questions. You have the chat, you have a questions tab, and really we are really here to answer to your specific questions. And of course, a replay will be available soon in the coming days, and also on our YouTube channel, because now QuickSign does have a YouTube channel, so you can follow us and connect for more content. And I want to say also that we will have live polling, so be ready to answer our questions. Okay, let's begin now. What's at stake when going international for financial services? Charlotte, financial services are oftentimes large entities, right? Scaling across multiple countries. Does it make sense to you to speak about one corporate dream?
So yes, it does. It can seem strange to talk about the singular in this one corporate dream, but it's a massive trend that we're seeing across all financial services, whether we're talking about the mobility sector, the credit sector, the banking sector, notably with neobanks as well. And this was true when we were with Antonella already, but it's now picking up pace. So what is the corporate dream? I'll explain. Firstly, there is a vision of needing to massively reduce costs. I mean, we know the market context today, all financial services are trying to reduce massively. So how can you do that? The idea is not to have individual services in every country, but be able to harmonize across and then be able to scale in terms of volume and price reducing. The other thing that we're seeing in the dream is to say, okay, let's have just one API gateway for all countries, and then we'll be able to just connect once and have that be accessible for all countries. The idea is also then to have only one SLA versus handling many, many services and each individual SLA. There's also, and this is really key, it's the notion of having access to quality data across all countries. And this might seem logical, but it's actually very hard to recuperate quality data that is harmonized across countries, that you're really comparing the same things. And so the idea is to be able to do that via this one API, to have the same information and be comparing the performances of the different countries on the same scale. The idea is also to have one billing source to facilitate things on the administrative level for the financial service. And of course, on the more marketing customer experience side, it's to have this control of the brand harmonization across countries. Bearing in mind that a lot of these financial services, when they are in multiple countries, they've often bought, or you have, for those who are watching, you've often bought local entities and then embedded them within your own company. So the idea is to get back that control of the brand harmonization and ensure that it's really one experience for the financial service. So that is the dream, and it's what we're seeing from all sides of the financial service realm.
Sounds really dreamy, your corporate dream. But is it realistic? I mean, we have identified 3 major brutal realities which need to be overcome in order to scale. Can you please take us through them, Charlotte?
Yes, of course. So there are 3, and the idea is that we can untangle them, and also asking a lot of Antonela from her feedback and experience on the grounds, both in European countries and Asian countries. So the first is, oh, I love these ticks. Local compliance. That's a big subject. We are talking about Europe, so there are regulations, but there are also directives. So how do we handle that? The second aspect is the local habits. We're not seeing the same behavioral structures in different countries, so how do we overcome those? And finally, the third is the tech stack status, because we may have a dream of a single API gateway, but how does that actually work? Is it possible? Depending on the maturity of the financial service, we can have some limitations there. So we're going to untangle these 3 things.
Yeah, thanks for the intro. Actually, yes, these realities will be the agenda for the webinar. So let's start with the first one, local compliance, right?
Exactly. And so I did a little bit of a teaser here with Antonela's background. So just before we deep dive into that local compliance, I just wanted to re-emphasize the fact that we are in a B2C context. So businesses working for customers, so our businesses are financial services. And though there is one corporate dream, that it's shared across the world, Antonela, you've experienced both the European approach and the Asian approach on scaling. Can you tell us a bit about those differences that you've witnessed on the ground?
Absolutely. Local compliance is also hitting one of the things that is also culture related, right? So in scaling a business, and we did this, and I'm seeing people around here that will definitely echo what I'm saying in here. You do have the European way of doing, you have the Asian way of doing. In the European way of doing it, we do also have among ourselves as European different approaches, right? You do not do the same way things in UK, in Germany, or in France, but you do have kind of European way of like structure things, approaching, debating, planning very much into detail, debate, really looking into ROI, all of us then done those projects, construct and then do all the benefits and also the strength and the weakness of each of the progress and so on and so forth. So we are very much organized. We did see, at least on my side, I did see what is meaning also when you go into an Asian approach, right? Where the rapidity and the fast speed of approaching the things are different. The planning is not the same thing, right? You go into a shorter timing approach and planning, and then you have a proactive mindset in there, right? It's like, we're going to deal with it when it's going to come, right? We're going to react at that moment. And the proactivity approach into tackling with innovation is completely different than what we have into Europe. And then in the automotive, to be more specific, into automotive sector, the Asian culture and the Asian actors are coming into it as conqueror, right? So they come into conquesting actually and getting the customer. So it's not the same positioning that the current OEM have today. We're actually looking to maintain an existing database and maintaining an existing customer satisfaction, and though don't also have as a second approach and a conquest approach, right? So that's definitely a big differences in a way of approaching and tackling innovation and customers' journeys in that.
Right. Thank you. So now let's start the topic of local compliance. We have our first live question for you. Aha, live survey. Okay, so I'm going to explain to you how it's going to work. You will see a question on your screen, this question, okay? And you will need to click for the answer. So let me just submit this question. Here it is. So you need to submit the vote and we will see your answers. Well,
and nobody's going to get a grade for this. No diploma at the end, right? So no pressure, guys.
Oh, it's fun because we're seeing the statistics.
Yeah, I love that.
Does everyone see them?
Yeah, I think they should. I'm not sure about that. Right question.
It's the button on the right corner, right? It goes on pulse. Yeah.
So maybe Antonela or Charlotte, you can comment on the results of the survey, right?
Yes, absolutely. So we're seeing that 58% believe that it's over 50, 37% believe that it's around 40, and there's 5% that think that it's less than 20. So we are in Europe. It's a very administrative environment. So we are definitely over 50 regulations and directives that are specific to financial services.
Right.
So for the purposes, so it's a lot. We understand that it's a lot for financial services to handle. For the specific context of this webinar, we're going to focus on some key ones. But before we get started, I wanted us to all speak the same language. So I know everyone here is connecting your financial services, so you know about the AML and EBA guidelines. But just a quick reminder of these two very important differences between regulations and directives. A regulation is a legally binding act, and it's recognized by all member states. So think about it as a passport, that once you have something in place in one member state, you can take it and bring it to all the other member states. It's passportable across. So typically that's GDPR and EADAS, which is specifically to digital onboarding, so electronic identification, authentication, and trust services. On the other hand, you have directives. So directives will be locally interpreted. So an example is PSD2. Another example will be EID national schemes that are being put in place locally and only applicable to the country in particular. So bearing in mind that these are the two structural differences, let's dive into what are the types of services that you would want to provide your customers. So there are two major categories when we're looking at the EADAS regulation. And the first are KYC. So you want to be able to identify a person, okay? So whether we are online or in a store or in a dealership or in a showroom, you can have very different contexts. You can also have hybrid contexts where you're both, let's say it's a couple and taking out a loan, and one of them is in a store because they want to buy the most fabulous couch they've ever seen in their life, and the other one is remote. So how do we manage the different KYC levels? So firstly, there is a legal basis for how to handle this. EADAS does explain that there are 3 different levels. There's 1, low, 2, substantial, and 3, the highest. For financial services, there is low, and you'll see it depends on how you want to contractualize with these people. So the low level of identification will be really, you just need to upload an ID, you apply some OCR, and we're good. Substantial will be really the equivalent of a face-to-face with someone. So typically, if you're in a store, that can be done by the agent. If you're online, that can be done with uploading the ID, then doing liveness detection and face matching on that, and then having a human verify, but asynchronously. So for the customer, it's a full, seamless experience. They don't speak to any humans, but in the background, there are experts that are trained in identifying people remotely. So that's the substantial level. And the third, this is not actually used for financial services across Europe. This is more what you'll experience in an airport, for example. These are highly specialized equipment, typically used by border control and the police to have a fraud access and privilege to specific databases. So that's on the KYC side. And then on the electronic signature side, so if I'm clicking here, we have also 3 levels: simple, advanced, and qualified. Now, depending on the level of signature that you're going to have, you will have a different level of KYC that needs to apply. So when you have a simple level of electronic signature, that's really the equivalent of a consent. And you can be very free in terms of what type of KYC you're going to do. When you have the advanced electronic signature, so the difference between simple and advanced is you'll have a strong link between the signed document and the identity of the user. Here, you're going to need a low or substantial level of KYC, either 1 or 2 of the KYC levels. And then when we get to the qualified electronic signature, which is the exact equivalent of a handwritten signature, you then need the substantial level. So this is a lot of information to take in for those who are not well versed in the EAS regulation.
Clearly.
I speak about it because Antonela, I mean, this is typically what we had to go through together, quickly needing to onboard your teams across different countries, compliance teams as well. So it was
that was raising a lot of questions back in the time. Getting all this information digested by different levels of people into an organization, one of like Stellantis back in the time, was not an easy one to get, right? It's kind of a hit from an intellectual perspective, but also from a business perspective, right? So typical things like, okay, they're going to sign a contract. Back in the time, the teams in operation were signing and checking every page of the contract that was signed, right? That's already changing into approach when you're going into a digitalization of that process itself. So a lot of effort and explanation and training in there that were really important to do. So it's really key in that to make sure that every actor from each department understands that how each one of these topics are playing into it.
And it's so interesting that you mentioned what it was like for your teams at the time with their process, because what we see on our side with financial services is we see very huge variations of digital maturity. So some financial services, we're taking them from paper to the digital world. So there's a lot of explaining on that side. And some are already digitized and they're more focused on optimizing their conversion. So we really need to meet people where they are. And for those who are more mature, it's saying like, okay, how can we think more strategically about how to approach regulation in order to improve your conversion rates? Because there are things that we can do, ways to navigate. Typically, whether we have services that are KYC services that are validated in one country versus another, they may be less strict, but still passportable across countries. So there's a lot of adaptation and also education to do on that side.
Absolutely.
Yes.
And let's not forget that for everybody there's a financial solutions, and especially for the automotive sector, you have 3 parties that are involved in the process that needs to be conceptualized. So let's not forget about the dealers in there.
Yes, and that's the same if I take the case of insurance. You also have the agents of insurance. So there can really be this tripartite aspect, definitely.
Yes. I think there was a question in the question tab.
Let's try to get it into something that I'm seeing Sue around here, that she's definitely going to know what I'm talking about. When we started this project of digitalization and putting in place a full online onboarding process back in the time for the customers, we worked a lot, Work UK back in the time in the process, and we had to justify a lot in like, how much we think that the business will need to take, how much the dealers will going to go into it, how many contracts will go, what is the ROE, what is the effort of the IT to go into it, right? That was a lot of energy, time, and emails and files and so on and so forth that we made to actually do that full online onboarding in that. Well, when I've done exactly the same thing to VinFast, I've only said the customer needs to have all the channels needed, all the channels available for him to go into a store and to have a full online onboarding. There was no whatsoever think about how much effort will mean from an IT perspective to put that in place. And they said, like, go do it. And then I hit my head on the walls to get it done, and it was done. Right? So it's a completely different approach, because there is no, at that stage, that kind of same approach into it, but you got it done and the satisfaction was still there. You just got to different kind of roads in there, one which is fun, much longer, right? A little bit of curves in there, and the other one that is like directly high the mountain, right? And you start to get there after you say yes to the project, all the hurdles, and you deal with them. So completely different things in that.
Nice, thank you, Antonela. Okay, so let's go back to our agenda. So we are now at our second brutal reality, which is local habits, right? And I think Charlotte wanted to start.
Yes, so it's the live survey yet again. Get ready for your polls.
Yeah.
Does customer behavior differ greatly between France and Germany?
Yeah, here it is. You can now vote.
So no, they're neighbors, only languages differ, or yes, it's a fundamentally different approach. Okay, this is exactly what Antonela had anticipated. We would have 100% on yes, it's a fundamentally different approach.
For sure, everybody felt that in their life, right? So
tell us about it, Antonela.
Yes,
indeed, we do have our. Can you still hear me, guys?
Yes, absolutely.
We have a lot of differences in that. So if we move to the differences in terms of technical behavior in there and pure financial services approaches, you do have a different kind of products in there, right? In the German market versus the French market, you do have a pretty nice proportion of the leasing also, but leasing is designed differently. Less of an operational leasing and financial leasing is defined completely different, with residual value, without the residual value, with kilometer leasing, without kilometer leasing. I spare you the details on that part. Also, in terms of loan products, they have pretty much better penetration of balloon loans versus the French market, and so on and so forth. Then a second part in there, for the choice of the customer is used to go into website aggregators. Those aggregators are aggregators in which he can see the leasing offers, right, and can easily compare them, right? And everybody and the competition has become much more complicated in that, as actually you can actually have really one next to each other, a bit like the compare insurance, what we already have in the French market, but you also have it for the car and the leasing things into it. And then is this transparency in which the customer is used to, and this transparency is brought by the leasing factor. That leasing factor is displayed right next to each one of those leasing offers that you have on the three-party aggregators website, and you actually can see if one offer is better than the other. Although on the French market, you actually have in that everybody's communicating with different type of leasing offers, like somebody in 37 months, other OEM in 48, 49, down payment low, no down payment, high down payment, insurance included, insurance excluded. And you actually, as a customer, you have to be an expert in financial products to be able to compare those ones, right? It's not the case for German market. German market has that kind of transparency, which makes the competition and the marketing approach and the financial products building far more complex in that to do, right? And then probably you can give me a hand in there, Charlotte, with the technical part of that, because that's your mastering.
Yes. So what we're seeing on the tech side is, I would say, in terms of maturity of tech, like that's not the issue on the financial service side. But what we are seeing is differences in customer behavior, where the French market is more digital savvy, where there are higher rates of digital penetration. There are also ways in which, remember, we were talking about the regulations, which are recognized by all member states. The BaFin has actually made a specific requirement on how to do biometrics. And so depending on where the certification was done for the biometrics, they will add additional things. So it's, there are always exceptions, and the German market is one of those markets with exceptions. I will say, though, that in a way it's a paradoxical market because it's also where N26 was founded. So one of the big neobanks. And so there is, on the one hand, a lack of digitization, and then on the other, boom, a success. And I remember, Antonella, when we were discussing that actually with VinFast, you had a higher digital sales than you did in France.
Absolutely. The full online onboarding process was far more successful in the German market rather than the French market.
So here we're giving big guidelines, but we do see some anomalies if we're looking at statistics. But in general, the French market is much more digital savvy. It's less restrictive. So typically, if we're thinking about credit, you can do a credit with the advanced electronic signature. We see some actors that are also doing simple. It's more rare, but it's possible, notably in the payment industry. And then German market, it's impossible. You have to do a QES. It has to be the exact equivalent of a handwritten signature. So really, there's like more fluidity, I would say, on the French market. And we already spoke about the online strength. Because we have you as a guest star, Antonella, I was thinking of the mobility sector. There are big initiatives in France, notably with car sharing. I'm thinking about BlaBlaCar. It's really, the online power is very strong.
Yeah. And if you want to know more, Antonella gave more insights in the Breakfast with podcast. So if you want to watch it,
absolutely. We really deep dived in your expertise. That was great.
Yes.
I'm seeing the time go by, so I'm continuing. We have a second live survey here. What do the Italian, Belgium, and Portuguese markets have in common? So you're about to see a question pop up on your screen. So they have high penetration rates of open banking and anti-fraud systems, high penetration rates of national EID schemes, or Michelin star worthy potato dishes. And I see it's start, but it's star.
You can see we love pools.
Yes.
A lot of people are into potatoes today.
Yeah. 11%. Okay, interesting. We are seeing that there is an expertise here in the crowd because we're seeing 75% on the high penetration rates of national EID schemes, and that's indeed the case. So for those who don't know, so I'm going to talk a little bit about this EID national scheme. So what is it? We spoke in the KYC part of biometrics. We were talking a lot about biometrics. But on a substantial level, there's also the possibility of relying on a national EID scheme. So examples are SPID in Italy, ITSME in Belgium. We have other ones, Chavo Mobile in Portugal, etc. So what's happening here is that they're only used locally. So when we're thinking about scaling internationally, it can be a little bit problematic because it means integrating a local specific national EID scheme. And by the way, how it works in the customer journey is that the customer only needs to put their login password and they're identified. It's done. They don't need to take a photo of their passport to do the liveness detection face matching. Just log in password and you're done. And in the Italian, Belgium, and Portuguese markets, what we're seeing is around 70% of penetration rates of these EID schemes. So very powerful for higher conversion rates on the onboarding flows. However, in other countries, for example, if we're looking at France, we're more hovering around the 12%. It's really not picking up. So it's not relevant for that market. And it's important for financial services to have that intelligence and be able to trigger one scheme or one process versus another. And typically in Italy, Belgium, Portugal, what we're doing is we're offering this EID national schemes as the main option. And then as a backup, if the person has forgotten their login password, for example, we're going to go onto the backup as a biometrics. So what we do at QuickSign, just for your information, is that we have an ID hub. And also beyond that, we have a marketplace specifically for digital onboarding. And the idea is we only expose one API. So if we're thinking about the financial service with their API gateway. We also have just one API, and it's possible to consume these EID schemes just in the same way that you're consuming any other service. And of course, everything is compliant. And the way that the power of it is that it's organized. It's organized into 3 categories. EID, so that's where the ID hub is involved. It's where the biometrics are involved. eKYC is how to get additional information, so proof of address, salary slips, tax information. So here we can either go via the OCR route or go via API calls, for example, to telecoms to get 100% viable information. And of course, electronic signatures here, where we have different certification authorities with redundancy, so that we're making sure that the conversions, the 99 and 99% SLAs are maintained, etc. And again, talking about the quality of the data is that everything is then traceable in the same way for all the countries, whether they are using EID schemes or not. There's really a simplicity in that. That's the goal of what we're offering.
Yeah, now we have another live survey for you.
Exactly. Is it possible to sign a credit contract electronically with an advanced electronic signature across Europe? So yes, of course, or no, you're kidding. So the idea here is we saw the different regulations. Is it possible to just simplify everything and just do the advanced for all countries? Can we be efficient here?
Well, we have a lot of optimistic people.
71%, yes, of course.
I think that
Advanced,
you're
it's
kidding,
sweet
put
spot.
everybody into doubt.
The sweet spot, that advanced electronic signature, can we use it everywhere?
Yeah.
The
answer is no.
Absolutely no. You're kidding.
It would
It's
be
not
too
possible.
good to be true.
Yeah, that's
Exactly.
it.
So why is it not possible? Well, as I was saying, the German market is different. So, well, first thing to bear in mind is, what is the actual financial product that we're talking about? So, for example, in Germany, for credit, it has to be the qualified. But it's the same in Belgium and it's the same in Italy. So we're going to need to have some qualified. Spain, on the other hand, even for credit, we can have simple level of electronic signature. For some rare cases in France as well. In Poland, it's possible, but leasing, which is also a form of credit, but leasing will have to have some qualified electronic signature. We can go on this slide. Thanks.
Okay, thanks.
But it's true that most countries will accept advanced. You can see it here. So we have France, we have the UK, we have Ireland as well, Spain. But there is a tendency towards more regulatory control and upscaling of the regulation and upscaling. We're seeing that across. So a few things. It will depend on the financial product that is being used and required, and there may be some variations in that. It also depends on the level of risk. So we've seen some financial services that don't need to have a qualified electronic signature, for example, but based on, for example, the customer that they have scored, or based on the amount that they're going to be giving away, they do want to upscale in their signature. What you're seeing on the map here is, it's like a photo. Imagine it's like, boom, this is what it looks like right now. But the system is constantly evolving. So maybe we speak in 3-6 months, and there's going to be some variation here because new products are arriving on the market and new requirements are being asked of financial services. So it's definitely, there's a lot of movement, and for financial services to keep up to date with this, it's helpful to have an expert that will accompany with that aspect. Okay. I don't know if Antonela, you wanted to add something on that level.
Well, when you start to implement these kind of things, it's a lot of changes, right? Because let's face it, as you said, Sarah, this is one picture at this stage in time, but this can change on time, and that means that you need to have somebody that is running over this and is not in your team, because that usually is expensive to have. And you move it forward in the best case, and you're actually focusing your attention as a business on your business. Okay.
So I think we are arriving at the last part of our webinar. So broader reality number 3, tech stack status. Charlotte, what's at stake here?
So, as I was mentioning in the introduction when I was talking about the corporate dream, there is a reality. So there is a technological reality, which is that. As I was mentioning, when financial services are across Europe, depending on their origin story, they're across Europe because they've been scaling that way as a neobank, for example, or they're across Europe because they're a massive industry and they've been having local mergers. And so a financial service might find themselves with a lot of local integrations. And this can be, the pros are that it can be effective. There's a sole local contract, so the teams in that country are feeling responsible and in control. They choose their services versus having them imposed by the corporate. So that can be seen as a benefit. The con is that it doesn't scale beyond the borders. I mean, once we've integrated locally, that's it. We can do more within that country. We can have more services, but it's not benefiting the financial service at large. And because of that, it's not only, if there's a great business case, you can't transfer it then to your neighbor, but there's also minimal financial gain because there's not that scaling side. So on the other hand, the API gateway, that enables record go-to-market timings because each individual country doesn't need to integrate a new service from scratch. They already have their connection to the API gateway and they need to trigger that. What we've been seeing is we have up to minus 40% costs for the financial service because, well, I'll get into it later, but we can really have a big impact on this. There's also the agility, depending on the provider that you're choosing, to still be able to handle local specificities. So still having that local edge. And then something that we don't always talk about, but it's big for financial services, is having centralized security and conformity assessments. Because what we've seen when we were doing the local integration is that every time our teams needed to go through very, very in-depth auditing from a compliance and security perspective. I'm talking about like hundreds and hundreds, if not thousands, of Excel lines, that need to be filled in. It's really hard for the local teams also to be able to manage this administratively and make sure that they are at the standard of the financial service. When you have an API gateway, that's done on the financial service at corporate level, and it really takes off lifts off a weight, for the financial service on the local side. So thinking about the cons, an API gateway requires immense coordination and organization for the financial service to put in place. So it's putting in place this IT infrastructure. It's being able to onboard the teams, having them, coordinate the roadmaps for all the different countries. It's really, it's a lot to put into place. And the initial integration time can take a bit longer because we're not on a specific use case. It's more on a layered approach, and then we can add the specificity. So a longer initial integration time, but then the benefits just trickle through with the record go-to-market timings and also the financial aspect as well. Antonela, how is it for you? What have you seen on the technological aspect?
So we did the API gateway, the first one. And one of the things that, it's tough also, that part from a business perspective, is that you need to define everything from the beginning. Whatever you actually realize afterwards, any change that you've done to that API gateway at the beginning, you need to have huge analysis of impact afterwards. So you have to have it really well done, oversee whatever changes could be in the future, and we see how much the future is changing on that compliance part, and be able to prepare that part. So we did the API gateway on the VinFast part, and it was a success. Was helpful to be able to deploy it kind of fast in the 3 markets that we deployed in VinFast, and that was a successful into on digitalization and into being able to push into all kind of channels that we have today in the customer journey. So again, it's not a solution fits all to everybody, and each business needs to have its own assessment in that.
Yeah. And I think before it was a like an innovation, but now what we're seeing on the market is that it's going to be an unconditional must-have to have this API gateway scaling across countries. There's no way around it eventually. The idea is, how can you have that API gateway without annihilating the local specificities, because they would still be present on the market.
Yeah, I see that we only have 3 minutes left, so I propose that we now talk about money, because it's the most interesting part at the end of the day, right? So our live question is here. So last live survey.
How many potential savings has a major European financial service made from scaling its digital onboarding? So this is over the course of a year. We have 500,000 across 5 countries. 500,000 across 5 countries. I imagine this is 2 million across 5 countries, or over 3 million across 5 countries. So let's see here, who's conservative, who is very ambitious on the actual capacities.
I'm sure that everybody knows.
500,000 is 500,000. It's not bad. Okay, I'm seeing that everyone who's connected truly believes in the scaling across Europe, having a potential saving of 3 million. This is something that we discussed on the actual term that was being used with Antonela, this idea of potential, because it's true. Having the exact number is very difficult. It's how are you getting that, from which source, especially when we're talking about different countries, etc. So the quality of the data was important. I was coming back to this saying, okay, we do have all these countries in place. We have 73%. That is correct. So over 3 million across 5 countries. So how is this calculated? So typically, remember, with the local implementations, one of the major cost-cutting aspects are the licenses. So we could historically have per local implementation. Then once you're having an API gateway, we can rediscuss the license. So that's one part. There's the local pricing thresholds also on products. The higher the volumes, the lower the threshold. So when you're talking about major financial services, those gains can be massive, because we're talking about millions of transactions. So we're lowering the price and really getting here. There's also less local audits, so it's harder to I will go fast, Charlotte. So, there's also that cost of internally that can be reduced as well.
Yeah. And if our listeners, they need to remember one thing, what would that be?
So on my hand, it would be that orchestration is the synonym of scaling. And by orchestration, I mean really the collaboration of the financial service and with their provider. So it's having the technical reality, so one API gateway, choosing the right partner to be able to scale across the different countries and be able to orchestrate those local specificities, and then having that become a contractual reality with one master service agreement. So it's one MSA, and then we're able to have those lowered pricing and have it make sense on an economical scale. And that's the way you're getting the tech, the compliance, the customer onboarding, and the financial gains all in one. And that's how the EU scale can happen.
Yeah. So that's a corporate dream.
Yeah, that's how we get to the corporate dream.
And what about your vision, Antonela?
Well, we all seen all the brutal reality in there, right? There is a moving reality in terms of everything that's called local compliance, regulations, and so on and so forth. The tech is evolving a lot, and so on and so forth. But the most important from everybody in the financial solutions and in the bank sides, it's the customer, right? And to get to that customer, you do have a dealer, you do have 3 parties, you have intermediary also for the other sectors in there. I'm sure that it's the case also. And therefore, what you need to do as a business is making sure that you actually able to focus on what's important on your side. And that's the business and the customer, right? And make sure that the business process, the business journey, the customer journey, the customer satisfaction, the dealer interventions in there as smooth as possible. So you do not actually push your customer to do things, but you are aligning to what your customer needs in that, to be secure, to be safe, and to get to the product that you're wanting to get. And that for for me, from my perspective, is to make sure that all these deal things of compliance, regulation, type of accesses, ID schemes, tech parts, API, and so on and so forth, you put it in the right hands of the right provider. So you need to
Yeah.
choose wisely your provider in there on the way in which you actually can focus on what's important for your business and making sure that you have next to you the right provider to support you on that part. And that's
Right.
for me the key on getting fast footprint and develop and make it successful and reality any scaling of business internationally.
So that's really good conclusion. Thank you so much.
Yeah.
Yeah, so I've already spoken about our Breakfast with podcast, so you can, scan the QR code if you want to watch it on our YouTube channel. And I just wanted to thank you so much, Antonella and Charlotte, for being here today, and thank you everyone here for joining us. I hope you had a great time. We look forward to getting your feedback, of course. If you have more questions, you can contact us, and the replay will be soon available. We are already preparing a new webinar for September, so you can still follow us. And thank you so much, and bye-bye.